Greetings traders, this is Houston Trong from thetradingedge.org, and here is your market watch for June the 14th to the 18th, 2021. Hope you had a good trading week and hope you're doing well. This past week, the markets continue to do what they've been doing, that is to grind higher. We saw some fresh all-time highs across on the SPY, and there doesn't appear to be any reason to believe that we're not going to see this regime continue to play out. The volatility has been continuing to decay. That means we're pulling back in terms of vol, and it really feels like we're already trading in the summer season. This is like summer trading right now, where it's super inactive in terms of the overall indices, and that may have a large part to do with the upcoming quadruple options expiry this coming Friday. So on my calendar this week, I think there's kind of three things that I'm watching carefully. Number one, FOMC on Wednesday. So likely we'll see a bit of volatility. Hopefully some volatility picks up on Wednesday. More than likely we'll see some folks, some positions get dislocated a bit, as I'm sure some people have gotten some bad trade location as the markets just grind higher. I wouldn't be surprised to see some folks get stopped out around that event. Then on Thursday we got that jobs claims number. I always wanted to watch, as I've been talking about on these videos for the past several months now, actually closer to a year. The market continues to work in this sort of good news is bad news type of narrative. So anytime there's a high jobless claims number or a weak jobless claims number, that's good, right? That's good for the market, bad for the economy. But right now, people want to see the Fed continue with their, when I say people, I mean traders and investors, they're best served, if you're long, with the Fed keeping this loose monetary policy. And the States is still talking about more fiscal spending, so that continues to be a good backwind for the stocks. At the same time, we got that quad witching I mentioned already on Friday the 18th. And there's this whole idea of a gamma spot pin. So just long story short, that simply means you have large open interest around a certain strike price, and that will cause basically the markets to get stuck there until you can either break below there or break above there significantly, and we'll probably see some of those dislocations, or maybe the markets get stuck there until quad witching passes on Friday. So not expecting a lot of movement. Again, there could be some intra-week movement that that may cause some folks to get stopped out if they have poor trade location, i.e. you've been chasing. But for the most part, no reason to believe why even a pullback doesn't lead to more gains for the stock market. This right now, everyone's playing the interest rate trade. That's what everyone's watching. Interest rates. This means the dollar falls in line with that, gold falls in line with that, and ultimately it causes equities to grind higher. Cryptos, interesting stuff to watch there. We'll talk about the charts in a few moments there, and we'll get into a deeper conversation about where I think things go from here. So with that said, let's launch right into our charts and start off with our usual friend, the VXX, and I'll talk about VIX futures as well. So VXX, the VIX ETN, what can you say? This thing's just been decaying, right? So we're back down now, close to the 30 range. Actually, where do we close at here? Yeah, 30.58. That was the low. We closed at 30.82. So it's Momo down on the monthly. We've been talking about that. This thing's just decaying. We're going right back into the range, into what we saw prior to the pandemic. So Momo down. No reason to believe why that won't continue going forward. On the weekly chart, there you go. Remember, we talked about this pattern we saw a few weeks ago, double outside bar, inside bar, and now we have 3 consecutive down weeks. That's exactly what you expect when you see this kind of pattern. You expect continuation. Once you have that break, you expect to have a directional move with all that pent-up energy, and that's, once you got that break this week here, that week there, I'm talking about the week of the 24th, once you got that break below that low there, just a continuation move. So intra-week you might get a bit of volatility. It looks like that things are going to reverse, but no, this pattern, until it reverses, continues to play out. So VIX continues to sell off. No reason to believe that won't continue. Let's take a look at the daily chart here now, and so basically we have this higher time frame understanding in place. The trend is down, right? So you're looking for short opportunities, and that's what you got on Thursday, Friday. Momo up on Tuesday. Wednesday was Momo up. Scares some people. Not a lot of people should be scared by this, but if you weren't looking at your time frames, you may have gotten scared there because VIX was up 1.6%. Again, that's very, very small. So you had a Momo up here, and ultimately that sets up a perfect fade, right? Because it was Momo up, it hits the orange line. That's your monthly open, so it could not turn the month green. The weekly open was was green until that day. Then look what happened here. That day on Thursday, Once again, we had a good jobless claims number in terms of, it was higher than kind of expected, and of course the markets picked up on that, and people liked that. Actually, it was a bit weaker than expected, but I think it was the trade was so crowded that it kind of faded, and Momo up, reversal short right there, and fades to the downside. This is a gap lower, right? So gap's lower here, and that means it traps anyone who bought up here, let's say on Wednesday at the close, and then they go underwater right away, and they have to cover, and if they don't cover, they get squeezed on Thursday and Friday. So the VX futures contract is a little bit more illustrative, just because you don't get that decay, so it tells you a little bit more. But yeah, you're trading back at the, what is it, the 16 handle now, 1655, and so right now on the monthly chart, you can see right away. Shooting star last month, right? We saw that, we pointed that out. So that's basically now a reversal. It takes out that low, April's low. So that's exactly what we're expecting. Once you take out this bar's low, you go after that pivot. So on the weekly chart, this is what's nice about it. We again, same pattern, right? Double outside bar, inside bar, and now 3 consecutive lower lows and lower highs. So that low is lower than that low, April's lows. So that's what we're expecting. Once you take out that pivot, right, you're going after that and some extra just for good measure. So there's the VX futures chart, and here we go. Momo down now. So momentum down. The only issue here now is that you have the Momo down, you're getting close to the Bollinger Band. What I expect to see happen is we're going to see a continuation of this move, and then you're going to get into the Bollinger Bands. If you get down here into the Bollinger Bands, you start doing that Bollinger Band walk, that's when you guys start paying attention for those sharp reversals that can cause people to get stopped out. So, the trade's been working, but now we're getting closer to the lower end of that Bollinger Band. So if things get even more, if things gather kind of steam, momentum to the downside, you're going to break into the Bollinger Band. You'll begin to do the Bollinger Band walk, and maybe Wednesday, so this is going to be Monday here, Tuesday, Wednesday, maybe around this area here when you're in the Bollinger Bands, maybe you see a bit of some movement around the FOMC, pops back up, maybe stops out some people before coming back down again and continuing its trend downwards, because the trend is certainly down by all measures, right? By all approaches across all time frames, it's full time frame alignment to the downside. And just to to give you a bit of historical context, as I talked about the last few weeks, look, we're back into the range here from December of 2019, right? So that takes us right back into the prior regime, prior to this whole COVID thing. This whole COVID spike here has now been faded, and we're back into where we were prior to COVID. So we're back in that area now. It's area here now where it's basically a Goldilocks scenario, right? So long as things are just perfect, no reason to believe why the VIX won't continue to fade. The volatility will continue to erode, and that means the stock market continues to grind higher. Okay, so SPY now. On the SPY chart, this thing is very, very strong. We've had, I think it's 8 now. Yeah, count them. 8 consecutive months of higher highs. 1, 2, 3, 4, 5, 6, 7, 8, and lower lows, right? So it's trending strong. You do not want to try to get run over here by taking big shorts against this thing. And if you do, they're probably very, very short-term trades if you're trying to short this thing, or maybe you're putting on shorts just for hedges, but you're not betting outright yet because it's full time from alignment with the upside. This is a a momentum hammer, as we called it last month. We broke above there now, and yes, I think we see more higher highs in the SPY. Although I think here this 424 area, maybe 420ish area. If you look at the options, you can Google that, take a look and see, what the open interest is. You'll find that strike price. That's probably, you see a bunch of hedgers or maybe a bunch of market makers having to put these hedges on both sides, and we're probably stuck in this range maybe until the end of the month. I could be wrong, but I don't think we grind significantly higher until after option expiry, or unless we get a pullback. So here we go, Momo up, right? It's Momo up now. Took up that prior high there. That's what we called for. We said we're gonna get all-time highs. We got that. Momo up now. It's got a long way to go still before we hit any kind of really upper end levels. So this thing could definitely head higher on the SPY. Momo up on the weekly. Expect more of that now. Very tight week, right? Really tight stuff on the daily chart. So we opened. This is the opening here of the week here. Inside bar start the week. Really tight stuff. Outside bar stops anyone who's trying to get along on that day, but this is not breaking the trend by any means, right? This is just enough volatility just to stop people out who are trying to get in now and don't have an hour playing with tight stops, right? So they get stopped out, reset the board, and it's Momo up. So your Momo up now, inside day on Friday. So very tight stuff. What was the week on the SPY? I think we're up, but up 0.4%, right? So 40 basis points, very, very tight stuff. Inside bar on Friday, so on Monday, you're gonna watch and see where do you break on this inside bar, up or down. And look, you're basing right on the prior month's high. All right, so that's a perfect place to base for more movement to the upside. You can certainly see another 2-3 day rally here until you get up to here. Maybe just in time for FOMC to stop them out and who chases this breakout move. So pay attention to that, watch for that, and see where that goes. All right, now let's head over to the Qs, as the Qs have been basically working their way back up to all-time highs, getting very close. And so we called that last, early in the month. Once you get that Momo hammer, once again, full time from alignment with the upside. If you break above last month's highs, you're going to go after that pivot there, which is the all-time highs, and that's what we're doing right now. All-time highs are 342.80. We're currently trading at 341.24. Again, 1 penny away from the weekly highs. So very, very strong close on the Qs. Expect this thing to go higher. I'm long ARK, ARKK. This thing has been doing well for the past several weeks, and expect this thing to move higher. Inside bar, 3 weeks to the upside now, so 3 weeks of higher highs, higher lows. And look at this chart here, the 2 week. All right, we called this one out. It's a Momo down reversal, and we're expecting that pivot to get taken out. That'll be all-time highs, getting very close, right? So that's the pivot for all-time highs. We're going after that. I think we get it this coming week. So on the daily chart, let's go back to that one there. And yeah, we have the inside bar break on Wednesday, inside bar, Thursday, Friday, right? So it's just full time from alignment here. Now, you don't want to be fighting this trend. There's no reason to believe this thing will not move higher here. Inside bar up, still some range if we get into the upper end of that bar there, band, excuse me. Even then, you can still get that Momo, that Bollinger Band walk to the upside. So very strong looking chart for the Qs. Everything is grinding higher at this point. No reason to believe it doesn't go higher. Let's go down now. Dow did take a bit of a break. So right now, 7 consecutive higher highs and higher lows on the monthly chart. 1, 2, 3, 4, 5, 6, 7 inside month so far. So this is not bearish by any means. We're just taking a bit of a breather here on the Dow. Dow hit all-time highs last month, so just taking a bit of a breather. So people are rotating a bit now from the cyclical names back into growth names like the ARK names and so forth. So Dow this past week took a bit of a breather. So it's an inside bar for the week. So now this coming week we want to see how does this inside bar break, right? And if it breaks, you don't just short it to the downside right away, because you still have mixed time from alignment. So you got a red month, so that's right here, right? See what happens there when you open there. This past week you couldn't take out the prior month's the monthly open, right? So you're red month, but you got green quarter. So this kind of gives you this movement here, and we do have, I think, 2 trading weeks left in the month of 18 trading days left in the month of June. So it's possible now, unless you break above the monthly open, we could get stuck in this range here if things stay this way, right? So you see the orange lines, that orange line there, that orange line there, that's the prior month's range. So right now we're inside this range, and it's possible now, unless you can break above the monthly open, and you can challenge it and break above it, that we just stay in this type of pattern here, and that would not necessarily be a bad thing. Again, once the month ends and we stay inside month, then you want to see in July on what side of this range price breaks in July. But for now, we're stuck in this range. This coming week, you watch the inside bar. How does it break? On the 2-week chart, this is what I'm watching for, and it's possible that maybe we break it this coming week. We got that, and I pointed it out last week, but this week we're still inside of it. We're still inside this outside-inside pattern. So we got some energy that's building up here now. Consolidation. We break above this week's high, this one here, this bar. That's outside, inside, and up. That'd be very, very bullish, because you got this pent up, energy that could expand. Or if you break below this bar here, then you pull back and risk taking out. I'm sure buyers are going to step up here because this quarter is still green. So even if you come in here, it's not a home run short. People are likely to step up here, so you have to be quick on the draw if you take those shorts, and be quick to take profits. Or at least trail to make sure you preserve your profits if you're going to go short. On the daily chart, just look how tight that is this week, right? You go nowhere. It's inside week. Outside bar. This is the Monday, and look how tight that range is, right? So you're sitting right inside the prior week's range. So we're sitting pretty here, just tightening. You see the bands, right? So here's your AWR, your average weekly range, and we're sitting right inside the the expected range, the average weekly range, and then you're just basically sitting at that lower end of that band. So if buyers step up here, we could possibly set up again for some more upside. You just got to see, again, just like the SPY. Was it the Qs? I think, no, sorry, it was the Dow. Yeah, you just got to see if you can break above that the monthly open. Otherwise, that could act as resistance, and you get that rangy price action. So again, if it's starting to feel a lot like summer already, even though summer doesn't begin for another I think 5 days. So June the 20th, we get the the first day of summer. But already it feels like summertime trading because yeah, the volatility is super low. Let's go with Russell now. Russell picked up some steam. So finally, Russell playing some catch up. Took a little time off there last month, but the last month ended strong, as we mentioned already last few videos. It went inside bar down. The buyers immediately repaired the chart at the end of the month here to close it strong, and now we got an inside bar reversal long, and it takes out April's highs. Right now we're going after March's highs. So inside bar reversal, going after the all-time highs. So it looks like we'll probably get it. No reason to believe we don't. As yeah, there's nothing. The narrative has not been changing around that. For the Russell, let's look at the weekly chart. Just steadily grinding higher, right? So inside bar, 3 weeks to the upside now. That's 3 weeks of higher highs and higher lows. A full time frame alignment to the upside. That means the trend is up. Do not fight that trend, guys. This is just one-on-one stuff. And again, the market's a super dull right now, right? So as the saying goes, I'm repeating this: never short a dull market. It's a good adage, and I think it's one worth heeding because it just keeps heading higher here. Okay, so we got an inside bar just to wrap things up on Friday, also on the Russell. So just like we saw in the SPY, how does this inside bar break on Monday? All right, trending higher here. Even if you get a inside bar reversal to the downside, I'd be looking for inside bar reversal down, reversal back to the upside again for all-time highs. That's what I'd be looking for the Russell here. Okay, TSX. This thing has been really moving, and again, 2 weeks ago I said I'm wary of it. I'm not saying getting short. I'm just saying be wary because you're into the Bollinger Bands now. So this is also 8 months of higher highs. 1, 2, 3, 4, 5, 6, 7, 8 months of higher highs, higher lows on the monthly chart, but going into the Bollinger Bands. So again, this doesn't mean short. This means you need to watch out for the Bollinger Band walk to get broken. Not likely to get broken this month. Why? Because in order to break the Bollinger Band walk, you have to take out this low, May's low. That's a long ways away. You have to come back all the way through here, take out that low, and that create an outside bar. Thinking in probabilities, I just don't think that's going to play out that way. Just given the way the market's moving right now, there's no reason to believe you're going to have this huge move. Again, anything's possible, but I'd be biased more towards this continuation move and seeing this Bollinger Band walk continue. Then in July, again, you reset and see where this bar closes, and in July you wait and see if this bar gets taken out to break that Bollinger Band walk. Because on the weekly chart, you still got some room to go. So even though things are getting heated, it's Momo up, right? We know the Momo up condition. We watch for that. We're actually not in the Bollinger Band highs. So even if we break this past week's low, so I'm just going to, let me just take that here, clone this. So even if you break the Bollinger Band, even if you break the Momo up condition here, it's Momo up, right? So 1, 2, 3, 4, 5 weeks of higher highs, higher lows. Even if you break this, I think people are going to step up there, monthly open. It could break below, but just we saw earlier, like here, you break below monthly open, some folks may step up again and then try to repair that chart. And until they get up into here, that's when I started getting more concerned. We're doing that Bollinger Band walk and the Momo up condition. Then you break the Bollinger Band walk and the Momo up condition. That's when things get a little iffy. That's when I'd have my red flag on. But for now, I'm wary, but I'm not trying to get short TSX or looking for shorts on TSX. Grinding higher. 2-day chart, it's Momo up as well. So look at this one. Momo up, not quite in the Bollinger Bands yet, but you can see how we could definitely start to go up there now and get this multi 2-day chart Bollinger Band walk back to the upside again. With oil strong, gold took a bit of a breather this past weekend. I'll talk about that in a few charts. But yeah, oil strong. You expect TSX to continue to move higher here. Emerging markets. This is one I'm a little bit surprised about because it lost a bit of juice. So emerging markets are not as strong because right now we got a red month. So we are sitting in some gains here, still up to 77 basis points. But we had a gap up in the early goings of the month, but they've given it back up a bit. But it's still a higher month so far. So we still got some time for this bar to get repaired. So it's still a wait and see market. So I'd still be biased to the upside because you're trading. If you can stay. The only issue here is that because this make it more apparent. Because you opened high and you fade back into the range, now you have the situation where you have mixed time frame alignment, right? So you got a red month, a green quarter, so is 18 days left, so you still got time. But that's a tricky thing here now, is like you might play this pinball action here until you can break above that monthly open. That's the level you got to break above and stay above in order for things to move higher. So that's the level I'll be watching right there, 56.17. But for now, you're kind of doing this, and again, things will get repaired if you can take out this past week's high. If you don't, you break below this past week's low, you come back into the monthly range again, and then again you still got that quarterly open right there. So it's really not doing a lot. Look at the bands, right? So there's your upper end of the average monthly range. There's your bottom end of the average monthly range. You're sitting right in there right now. So this, would not be surprising to see this thing just go like that. And that would just basically be par for the course. So that would be a very normal price moves for emerging markets. All right. So at the end of the week here, we had a small down bar on Friday, but they kind of repaired it as the buyers brought it back into the range again. Momo down. Can it break it above Friday's highs? Then you go after Thursday's highs and maybe come back in here again. But you get that red month, so that's going to be hard to change. You probably just stay more than likely in this range for the rest of the month. It just doesn't seem like right now we're setting up for any really big moves across the indices, across these assets. It's just a continuation of the current trend, or you see continuation of the current range that they're sitting in. Bonds, interesting to watch. TLT is very, very strong this week. Really good week for TLT. We've had now, we'll talk about it here in a moment. We had the inside bar reversal on the monthly chart, so that's progressing nicely. Inside bar down, right? You broke above that, so now you took out that pivot. The issue with the TLT is that I don't think you're going to go that far, with only again 18 days left in the quarter. I don't think this changes in terms of the inside bar condition, right? So TLT is moving well the past few weeks, but it's not been ranging, right? So not ranging. It hasn't moving in terms of large moves. So more than likely, we stay inside quarter, and that just means maybe you stay up here or you come back into here. It's inside quarter regardless. I mean, it's kind of sleepy kind of do nothing. As it's just expect this thing to stay within its current range. So there's your monthly chart. And the weekly chart you've had now. A little bit of reversal this week, right? So nice week for bonds, 1.72%. That's pretty decent. We took out those pivots, right? Everything you took out here. Now you're sitting on the upper end of that band. Maybe you pull back in here a bit, but you're trading with full time frame alignment to the upside, right? So full time frame alignment to the upside. Now on the daily chart, you do have this condition. So this is something I'll be watching a bit now because you're doing the Bollinger Band walk, and you got this outside inside sitting right in the Bollinger Band walk. This is a bit of an issue, right? So if you break to the upside here, you're going to go right in the Bollinger Bands, and more than likely they're going to fade it because this is not the market where people are buying directionally and expect a really strong move. It's not moving that way. I just don't think we're going to get that strong momentum. If anything, if we break above Friday's high, on Monday or Tuesday, I think we pop up and maybe they fade it right away and they come back on the range again. So yeah, bonds, nothing to get overly bearish about. But I just think right now that you really want to buy on weakness and sell on strength. That's kind of the name of the game right now because the markets are so tight that these directional trades at the upper end of the ranges are dangerous because that's where people tend to take profits because it's not a runaway market, right? The markets are not running away and people are chasing as much. What's going to happen now is the chasers get punished, and then the guys who step up on the dips, they're the ones who are getting rewarded. So this is a bit iffy now. Outside bar, inside bar pops up. Luckily, you get faded back in the range again. That doesn't mean it's a bearish overall market. It just means that people are getting dislocated if they're chasing, and then you pull back in. But ultimately, markets grind back higher again, and that means TLT should move higher. Maybe not a lot though, but maybe a bit higher. 2-day chart also doing the Bollinger Band walk now. So see how far that goes before it pulls back in a bit. Stops out some folks. So it is full time from alignment though, right? So full time from alignment on the daily chart. Again, this is something to watch for. FOMC is going to be here, right? So FOMC we have on the 16th. This is the day here. So TLT is going to be wherever it is in this day. That's going to be interesting to watch because maybe we get a few days trending up, and then on FOMC they smack them and they pull them back in or reverse. Maybe they pull it back first and they launch it higher on Wednesday. but expect this pattern to probably fail if it breaks out to the upside, and maybe they pull it back in again, they buy it back up again on FOMC. Again, those are some scenarios I'm laying out there, but I'm not expecting TLT to break down significantly or to rally significantly at this juncture. So the 10-year, again, TLT, the 10-year, so the long bond doing strong. That means the 10-year yields are getting weak. Okay, so yields are the opposite of the bond prices. So when prices go up, yields go down, and that's what we're seeing now on the 10-year. This is a different way of looking at it. Inside month, down, right? So that's kind of what we expected to play out here, because it's going to be inside quarter for the 10-year. I've been saying I think it's going to be very difficult for this thing to break above last quarter's highs, because we had the quarterly open right there. You opened high, you came back in, and now there's the very little chance now, 18 days left in the quarter, you come back to this range again and take out that quarterly open. I just don't think that's going to be a very, very low likelihood scenario. So again, I think we stay like something like this for the rest of the quarter, and you just want to keep your eye on the 10-year and see does the trend continue to the downside. That's what I would expect, although you might have some short dislocations, as I mentioned already, all right, this coming week, but more than likely, yeah, we just basically stay grinding downwards, but it's full time from alignment with the downside, right? So quarterly open, monthly open, yeah, you're trading to the downside there. So the 10-year not telling us a lot, other than that it's probably going to do more of what it's been doing there. And on the daily chart here, you might get that small, like as I said, like on the 16th is right here, FOMC. You're doing the Bollinger Band walk to the downside now. So this is basically the inverse of the long bond, right? As we talked about in the last chart. So maybe you do a Bollinger Band walk lower here, but then maybe on Wednesday you pop up and break that Bollinger Band walk, stop some folks out, scare them a little bit, but that's ultimately that it's inside quarter, right? So you're not expecting fireworks to happen, but there'll be enough volatility to likely stop out some people who who are getting involved down here. If they're selling down here, they're probably gonna get stopped out. If they buy up here, maybe fades back down again as FOMC comes out on Wednesday. DXY, so watching that, so a bit of a divergence here because the yields are getting weak this past week, but the dollar's getting stronger. So this is a bit of a divergence here. This is one to watch. But for now, DXY inside month, right? So likely not to change. I don't think we're going to break that prior month's range. Well, again, I'm happy to be proven wrong there. But look, this is the quarterly chart. I just don't think you break outside of that quarterly range with 18 days left. So I think we're just sitting in here comfortably. DXY. Although this is a condition I'm watching for now, and this would not be good for gold. So right now it's Momo up on the dollar chart, right? So DXY. Momo up inside bar, came very, very close to taking out last week's highs. The high there is 96.62. We got as high as 90.61. All right, so it came very, very close to taking out prior week's highs. This is still Momo up though. So if we break above here, we see a little higher prices here, and we don't have full time from alignment, but the coil opens way up here. So it's possible we go a little bit higher here. And that would not be good for gold. So that's what you want to watch for, is that we're going to see weakness in gold, and usually a strong dollar price isn't necessarily good for the stock market either. So this is one I'm watching very carefully, because I want to see how this plays into things. If all of a sudden we start seeing strong dollar prices, right, that would be something unusual. So that would be one part of the market that is signaling something, and you definitely want to be watching that. So if we go inside weekend up this coming week, that has to factor into your analysis. So definitely watch for that there. Let's redraw the ranges. Inside week there now, right? Which way does it break out of there? I'll be watching that very, very carefully, because yeah, that's definitely going to be material to gold. So here, daily chart, outside bar on Friday. Okay, so we break above Friday's highs, that's Momo up, and that'll be inside bar up on the week. So that's just what I'm watching for. But you're at the upper end of that Bollinger Band, so it's possible we break up and then fade back in again, or you do the Bollinger Band walk. So that's what I'm watching for. Sorry if I'm not being more explicative around what's going to happen, but basically the approach is that we don't try to predict price, which we're actually responding to price. So as each bar comes out, it gives us more and more information about possible turning points in the market, and that's what we're trying to build here. Is we're trying to build these layers and layers of scenarios that are playing out across timeframes, across asset prices, to help us gauge the strength of the overall markets. So right now, we see a bunch of indices, North American indices, trending higher, but we do have some things diverging, and that changes perhaps some of the weighting of the probabilities of where things can go. So this is one that I'm watching now as a potential headwind for the stock market, right? So that Momo up on DXY would be a bit of a headwind for the stock market. So keeping a close eye on that one. So gold, when you see strong dollar, you definitely don't see strength in gold, and that's exactly what happened. Because if you recall from last week's video, we talked about it already, that gold's kind of stuck. It's kind of at this critical juncture now where it has to show up or shut up. And right now, they can't break above that level being a 1908. Now, what's that level? The 1908 level, that area there. Well, what is it? Remember last week's video? That is the yearly open, right? So if I go back to that 12-month, it opened at 1908. Okay, so 1908 is the yearly open. We tagged 1908 a few times now on the monthly chart, right? And we cannot break above it right now. So on the weekly chart, it's this red line right there. So this red line right there, we came right close to it again. Monthly open there, yearly open right there. So we got this nice outside inside now. So the question is, can you break when this pattern breaks? Let's redraw our ranges. And this could be the week we do it. If you can break above this past week's high, then we can break above the monthly open and maybe take out the 1908 yearly open. And then that's going to be go time for gold. If you can break above those levels, that'd be very significant. Because right now the sellers have been very motivated. They've been very consistent with selling that level, right? So if we can break above that, hold above that, that would be significant for gold, and then you could definitely expect to see a multi-week move higher. So that's what you got to watch here for. Now the opposite is you break back that low down here, you're coming back in this range again, and you're gonna maybe tag that average monthly range. But you got a green quarter, but you got a red month, right? So that's the issue. Green quarter, red month, red year. So that's called mixed time frame stuff. So it's not clear until you can take out one of these time frame opens. If you can break above that monthly, yearly open, yeah, that's go time. Otherwise, you break below this low, you come back in again, and that could be maybe a multi-week pullback in gold, a bit of a rest there for gold. Okay, so let's talk about we're going pretty fast, and that's great. So let's talk about BTC now, because BTC, as I mentioned in the last week's video, I said we're seeing a potential sell-off now in Bitcoin and Ethereum. Now, those are the next two charts I'm going to cover. So let me pull up my BTC USD chart on Bitfinex. The only issue with this trade, I think, is getting crowded at the short side. So let's put this bigger picture in place first, and then we'll talk about the weekly action. 18 days left, right, for the month of June. How do you get outside of May's range? The problem here is that you're solidly inside month. Okay, like as more time progresses and you don't get closer to breaking May's low, the odds become higher and higher that we stay inside month. So 18 days is still a lot of time left, but right now, with what just happened this past week with El Salvador, that news around Bitcoin, the buyers stepped up and they basically they stopped out folks who try to get short on the pattern I talked about last week. So here we've got an inside month, and on the weekly chart, just what I was saying, it was the double inside week, but we still got the Momo down. If you break below this inside bar here, we expect some more selling. So we got that, and we did get a 10% down move on a bunch of cryptos. So you can call that a bit of a sell-off, but it's not a massive one yet. The reason being is because, as I said already, you still got that green, that inside month condition on the inside month condition, right? Inside bar, and that this red line right there, that's the prior quarter's low. Until you can break below this 28,540 area, it's still the trend is still up on the quarterly chart, right? So when I say that, this is what I mean. If this trend breaks, then I say that Bitcoin is going into a bear market, right? So you'd say, well, it's already a bear market because it's 50% down. Yes, but things can go further, because if we know that cryptos, they can go down 80%, right? So if you break below last quarter's low, then I think we see a lot more selling. But right now, the buyers are defending it. They haven't allowed it to get that far down yet. And now, with this past week's trading in Bitcoin, it wouldn't take much to reverse this chart, because this is actually quite productive for buyers. Even though it's right now it's a doji, I think that's actually good for Bitcoin. Look, it's only down 15 basis points after that big move to the downside here. Now we've created a situation where you have double inside week, and everyone got short here because it was just an obvious trade. The problem is that it's a good price pattern, but I think it was so everyone has seen this pattern already. We talk about it in terms of price action, in terms of the type of bars they are. But, people could say, well, that's a maybe some sort of a triangle pattern or some sort of I don't know, wedge. Whatever. I think those are very I get those are qualitative terms. Subjective terms. If you look at it in terms of how we frame it up, right, it's just basically double inside, down, right? That's just looking at the pure bars, very, very objective looking, and you can see that I think it's just crowded. People try to short it, they bought it back right away, and now you take out this week's highs. So on Sunday night, when we get the fresh new week, it breaks above 38, 337. That's go time, back to the upside. The quarterly open, yes, it's going to be a red quarter more than likely this quarter, but you have a lot of range to recover here, especially since this is a Momo down. If you break above here, that extinguishes the Momo down. Now I'm short a bunch of coins right now, just to be 100% transparent. I am short a number of coins, not Bitcoin though. I'm not short Bitcoin, but I'm short a bunch of other coins. I think I'm short maybe a dozen of them, but I will be very quick to cover if it breaks above this high, because Bitcoin, I said in last week, the crypto markets are very, very correlated, and this is what makes being short so hard right now. I've been trying to get short, but it has not been easy to get short, especially at these levels. I'm short now, but I don't like being short down here because I think it's a crowded trade. If you break above here, yeah, I'll be quick to cover my shorts, and then expect this move higher, because this is a Momo down. If you break above that, it extinguishes the Momo down, and then you can expect some short covering, and you can definitely rip higher here and force some of these shorts to cover. Who got short in here, they made some good money, but they're going to be sitting on open profits, and they're going to have to cover if they don't want those profits to evaporate. So it starts down here, right? And who got short down here? They're either underwater or getting very close to being more underwater, and so they're going to be the first to cover. Now as soon as you go up here, you're going to get more and more shorts covering, especially if you can take out that pivot. So Bitcoin actually not a bad looking chart right now, even though we had a break below the prior 2 bars range. Now this coming week, that's the bear bull scenario. If it breaks above there, yeah, it's go time to the upside. If you break below there though, wow, that's going to be unexpected, because this right now it's a doji, so nothing significant to about that. But certainly you had some buyer step up here. If you break below that low, yeah, that's going to stop them out more than likely. And so yeah, we're going after that pivot, and then possibly breaking below that 28,540 area, and that's definitely when you want to be piling onto the shorts, and I'll be getting bigger on my crypto shorts in terms of size. So there's your Bitcoin chart. Yeah, let's leave it there, because it's actually pretty tight trading. It's hard to be short, hard to stay short, because it's this situation here. That's this is Saturday, Friday, Thursday, Wednesday. So that's the day the El Salvador news came out. A good 12% day for Bitcoin. Hard to stay short here, right? So this is why, look, the price action is very indicative. Momo down into the Bollinger Bands, right? Look how flat the Bollinger Bands are. Look, we're consolidating. Can you see that? Look at the Bollinger Bands, how they're tight like that. We're consolidating. So now you tag the lower end of that Bollinger Band, more than likely we go up the other side and take out the upper end of that. So that would be a very distinct possibility there. And then maybe if the bands begin to open up again, we see higher prices for Bitcoin. But this is very tight stuff, and now you already tagged one side. Now they're going to squeeze them in and take out the other side of that Bollinger Band. That's what plays out very, very often. So there's your Bitcoin chart. Okay, inside bar down right now, right? So there's your inside bar down. You break above here on Sunday, inside bar reversal to the upside, maybe. We'll see what happens there. You still got another bar that's going to show up here on Sunday. Maybe that's an inside bar, who knows? And then if that happens, inside bar here, breaks above there, then you take out that pivot, and it's go time to the upside. Let's go Ethereum. And then we'll talk about the overall crypto market, and then our favorite shit perp index. Ethereum, here's the same condition, right? Outside, inside on the monthly chart. How do you break outside that? I just don't see Ethereum breaking below last month's lows, given the size of that range. More than likely, we stay inside month here, right? That's the probability. That's the higher probability scenario. And then we set up for maybe an outside-inside break in July, right, with the fresh quarter as well. Then that gets interesting, because once you get the fresh quarter, you get the new time frame alignment. Then if everything goes in the same direction, then you're going to have a directional move. So imagine, there's the two possibilities, right? You go outside, inside to end the month. You get a fresh quarter here in July. Then it goes outside, inside, up. That's full time from alignment. The only issue here is that you're right in the Bollinger Bands. So do you break up higher here and go back to these highs? That's possible. I think that's it's tricky because you're going into Bollinger Band highs, but that's something worth trading. If you go outside, inside, and down, wow, that's going to be full time from alignment to the downside. We'll talk more about that at the end of the month when this bar settles. But that would be a scenario where you definitely want to be getting bearish here, outside, inside, and down. Then watch out there, right? Because then you're going to have that pivot to go after. That'll be the quarterly lows for this past quarter if this structure holds. Now on the weekly chart, we had the double inside bar just like we had in Bitcoin, but the problem is that the trade's too obvious again. Just like the last time, we had a bit of continuation, but right now it's been repaired. Double inside bar down, you still got a green quarter, red month, so that's called mixed time from alignment. This is why this is happening, right? You got mixed time from alignment. Now you're getting consolidation. So just like we saw in Bitcoin, if somehow ETH can break above this past week's highs, we're gonna go higher, right? That's gonna be short covering time as they're gonna go after that pivot and that pivot right away, and then who knows where we go from here, maybe up to the average monthly range upper band there. Okay, so on ETH, anything else to say about that? No, that's pretty much the range you want to looking for. Just look at the daily chart. You can see everything's looking like this, right? This meaning the Bollinger Bands. Look how tight that is. See, that's consolidating because they're tightening, right? Now we tag the lower end of that band, right? So now that's not only the lower end of that band, but that's the lower end of that average weekly range. So we're sitting right inside the average weekly range, and we're at the end of that, at the bottom of that band, bottom of the Bollinger Band, and now you break above there. Maybe you do some short covering, but now you still have a lot of trends to go into the downside. You got a red month, right? And you got a green quarter. So yeah, you can expect a lot of this. But we did touch that low there, so maybe you can come back out and take out the upper band. If you can break below there, then it gets interesting, right? Because then we have continuation of that weekly break. So this weekly move, it's still in play. So we did get that inside bar break to the downside. This coming week, we break below there, this past week's lows, yeah, we're going to see continuation. That quarterly open is going to come into play if it breaks below there. Not 100%, but that would be the place that you have to watch for buyers to step up. But even then, you still got that green month. So I just don't see how we break outside this prior month's range with a few weeks trading. But anything's possible, and I'll be watching for that. So that's what I'm hoping that I'm conveying to you here is opening your mind up to seeing the price action in terms of probabilities and scenarios, and then being able to respond to the different scenarios that are unfolding. I don't drop these videos every single day. I only drop them once a week. So what the goal is really to help you keep you on the right side of price, and then intra-week you have to be able to navigate that intra-week volatility with the understanding of the larger trends in play. Okay, because if you get the trend right, and you get this, and you trade on the right side of price, that's putting the win to your back in terms of your individual trades. So whatever entry mechanisms you use to enter the trade, if you're trading with the overall trend, you stand a way better chance than trading against those trends. And then that's when you're gonna get frustrated and get chopped up a lot. So you trade with the trends, it's always a higher probability scenario than trading against the trends. Two more charts. Let's talk about the total chart now, the overall crypto market, and this chart looks very, very much like both Ethereum and Bitcoin, combination of both. So you got the outside inside on the month, right? Just like we have in Ethereum, and just like Ethereum, we have this looks more like the Bitcoin chart, doesn't it? The Momo down, double inside, and now this chart kind of got repaired. It took out last week's lows, maybe a little too obvious, hit the average monthly range band at the bottom there, pops back up. This coming week, you take out this high, this past week's high, and yeah, we can possibly head higher, just like we see with Bitcoin. Okay, there's a total chart, and lastly, let's take a look at the shit perp, basically an index that tracks, dozens of altcoins or shitcoins inside month. So as bearish as as the price action looks, it's still inside month. So ultimately, if you stay inside month, yeah, you can basically just grind lower as long as you stay in that range. Though it's basically range bound trading until likely July. Okay, so this coming week, what do you watch for? Same thing, right? So let's redraw the ranges. This coming week, do you break below this past week's low, and then you get maybe some move down to the downside here, or you break above this high here, and then you maybe see some higher prices on shit perp. Those are the scenarios that I'm watching for on the crypto side. So bias is still downwards because we do have full time frame alignment, but it's not easy staying short. That's the issue right now. It's like my trades are biased to the downside, but I'm watching for possible long reversals that will cause me to have to cover my shorts, and then I'll likely if this pattern sticks, right? So let's say you get an inside buy reversal to the upside, that will likely be the low of the month because it's an inside month. When you see reversal on the weekly chart, and you only have 2-3 weeks left on the trading month, then likely this will be the low of the month, and then you might get a counter move to the upside, with the understanding that it's still going to be inside month, but that may be the low of the month. That's what you're waiting to see if you get this break above this past week's high. All right, so that takes us to the end of our charts. As always, I appreciate the feedback that's coming back on the comment section in YouTube. If you have any questions or have any more items for the things that I think I can improve on, love to hear it. Just drop them in the comment section on YouTube. I had one comment about trying to kind of summarize what I think of the overall markets, and I think I'll just say it again. If you don't watch the whole video and you just you only tune into the end, my opinion is that we continue to grind higher on the indices. There may be some intra-week volatility because of FOMC and because of the quad witching, but I continue to believe that the path of least resistance is higher. It's an interest rate based environment right now where everyone's watching interest rates, and as a byproduct you got to watch the US dollar, but the bias is to the upside, and that means on the equity side, that is, the bias would be to the upside, looking for reversals to get into trades and not chasing, because the chasing is not going to pay off. They're going to stop out folks who chase because they have poor trade location, and then pull it back just to move back higher again. That'll frustrate a lot of people. And on the equity, on the crypto side, my bias is short, but being very, very careful about the possible chance of a reversal on these weekly charts that would then fix the chart significantly and then cause these bottoms to stick for the rest of the month. So my bias is the short side right now on cryptos, but we'll be covering them very, very quickly because it's not easy being short right now. There are times when it's been really easy to be short. This is not one of those times where it's been easy to be short with these crypto names. So with that said, I want to wrap it up here. As always, if you like the videos, give me a big thumbs up. I'm seeing a big bump up in viewers lately, so I really appreciate everyone who's out there watching these videos. Subscribe to the YouTube channel by clicking on the subscribe button, or head over to the blog, tradingedge.org. We can see the videos there as well. And as always, I wish you a good trading week. Stay on the right side of price, and we'll talk to you again next week. All the best.